this video, I'm going to share how to get started with stock market investing. I'll explain why investing is important, how to find the best broker for you, the different options that you can choose to invest in, how to start investing, and at the end of the video, I'm going to give you some investing tips and tools you can use to make your investing easier. So make sure you stay till the end of the video for that. So let's get into the video. But first, why is investing important? Let's just say you have $10,000 in your savings account. At best, the best interest rate that you can get in your savings account is from 1 to 2%. And every year our money is worth 2% less with inflation. Therefore, if you're leaving all of your money in a savings account, essentially your money is being eaten away by inflation and it's losing its buying power over time. Whereas investing in the stock market has given investors returns from 5 to 7% year on year over a long period of time. And these returns really compound over time, meaning the interest that you make on your money makes even more money over time. So essentially, the earlier you start investing in the stock market, the more money you'll be able to have by the time you retire. And that's why it's really important to start investing as early as you can. And by the way, if you're enjoying this video so far, please give this video a like. It really helps out my YouTube channel and helps me reach a wider audience. And if you do enjoy content like this, make sure you subscribe to my channel and turn the bell notifications on. This can help you stay up to date with the latest videos that I'm producing so you won't miss any uploads. And it also really helps out my YouTube channel. Now let's get into how to get started with investing in the stock market. But before you start investing in the stock market, it's really important that you do have an emergency fund set up. I know that it can be really tempting to just start investing in shares as soon as you have a bit of money saved up, but it's really important to have at least 3 to 6 months of your living expenses saved up before you start investing in the stock market. I think that now more than ever, with the future so uncertain and everything that's been happening with the pandemic, there's never been a more important time to have an emergency fund. And it will also make you feel so much better with your investments knowing that you have a bit of money saved up in case of emergencies and you have a bit of cash saved up to fall back on just in case anything happens. So now you have your emergency saved up. What next? How can you get started with investing? The first step is to find a brokerage site to use. Here in Australia, we have a range of different options for brokerage sites, including CommSec, CMC Markets, IG, and Stake. However, all of these brokerage sites have different pros and cons, so it is important that you do your own research and make sure you find one which is right for you. Before you choose your online broker, there are multiple things that you should look at, including thinking about if you want to invest in Australian shares only, or if you'd also like to invest in Australian shares and international shares. If you just want to invest in Australian shares, you can use most of the brokers that I've just listed. Or if you're just interested in investing in US shares, you can use options like CommSec, CMC Markets, or Stake. So it is important that you do consider what types of shares you'd like to invest in, because not all of these brokerage sites allow you to invest in international shares. And the second thing that you need to look at is the brokerage fees. Every time that you buy and sell shares, you need to pay the broker a fee. Usually this fee is around $10 for Australian shares. And for international shares, it's around $19. And remember that you need to pay this fee both when you're buying shares and when you're selling shares. So let's just say, for example, you'd like to buy $1,000 worth of Afterpay shares, and then you later sell that investment. You would have paid $20 in fees from both buying the shares and selling the shares, which is 2% of the purchase price. So this means that you'll need to make at least 2% back with your investment in Afterpay in order to break even. And that's why it's really important to also look at the brokerage sites that you're using. If you're just starting out with investing, you might not have a lot of capital in order to invest. So these fees, even though they seem really small, they can really start to add up. Number 3, the time that you can receive your payments into your brokerage sites. So if, for example, you're already banking with Commonwealth Bank and you choose CommSec as your brokerage site, There can be some benefits in doing this, including it can be really easy to transfer money from your savings into your brokerage site, and money can appear in those accounts almost instantaneously. For me personally, I use CMC Markets, which isn't linked to any bank, so I have to use a BPay payment in order to get money into my brokerage site. And there can be some downsides to this because it does take a couple of days in order for the money to show up in my brokerage site. So I won't be able to invest as soon as I want to. And the same thing goes when I do want to withdraw money as well. So that's something that you should also consider when you are looking at different brokerage sites. And the fourth thing that you should look at is the user interface and how easy it is to trade with shares. Some of the brokerage sites I've listed do have app versions available. So if having an app where you can easily buy and sell shares is important to you, then this is something that you should be looking at when you are weighing up the different options of brokerage sites. And fifth, which is the final thing, and that's the company financials and the research that you can get in your brokerage platform. Some of these brokerage sites also have company financial information listed on the brokerage sites, which can make it really easy for you if you're doing your research into the companies you'd like to invest in, instead of having to open up a bunch of different tabs and source information from a few different websites. For example, in CMC Markets, I can use advanced charts and also see all of the financial information for the companies that I'm investing in. And this helps me save time because I only need to go to the one place rather than opening up a few different places like Yahoo Finance and other sources of information. And if you'd like to learn more about picking an online brokerage site that you can use, I've put a link down in the description below to a video by Justin on his channel where he compares the different options, so you can have a look there and see which one is right for you. And let me know in the comments, what brokerage site do you guys use? I read every single one of your comments and I would love to know. I personally, as you guys already know, use CMC Markets, and mainly because they do allow the option of buying Australian shares and international shares, and the brokerage fees are quite low. But I would love to know what you guys use and the reasons why. So now you've found your online brokerage site, the next step is to decide what you actually want to start investing in. There are two main types of investments that you can make in shares, and that is ETFs and index funds, or picking individual stocks. For beginners, Warren Buffett and many other high-profile investors do recommend that beginner investors invest in something like an ETF or an index fund, because they can be a really great and cost-effective way to buy into the world's best companies. And ETFs generally outperform stockbrokers picking individual stocks. ETF stands for Exchange Traded Funds, and basically what an ETF and an index fund is an investment you can make in an index, which is the top 100 to 200 companies, in an index like the ASX or the NASDAQ. And some examples of ETF managers include BetaShares, iShares and Vanguard, and these companies also have a range of different ETFs and index funds that you can invest in. For example, you can invest in the top tech companies, you can invest in the top 100 companies in the US, or even some ethical funds as well. So it is important that you do your research, have a look at the different ETFs that are available to you, and see which one's right for you. And by the way, are you guys interested in learning more about ethical investing? Let me know in the comments. ETFs and index funds can be a really great option if you are looking to be a passive investor and just buy your shares and hold them over a long period of time. The average return on ETFs and index funds differs depending on which ETF you end up choosing. However, because this usually tracks the market, you can generally expect about a 7% year-on-year return. However, past performance doesn't indicate future performance. And if you'd like to learn more about ETF investing, I've made a video where I'm actually interviewing the co-founder of BetaShares and asking him pretty much everything that you need to know about ETF investing. So if you'd like to check it out, I've put a link down in the description below and also up in the cards here. If you are interested in a more active investing, This can be a good option too, and you may even be able to outperform the market. However, with higher returns comes higher risk. So it is really important that you do your research before you invest in any company. And don't invest more money into an individual company than you're prepared to lose. Some things I do to research a company before I invest in it include research the financials, research the management team, have a look at the annual reports, make sure the business has a competitive advantage which isn't easy to copy, and buy at a good price when it is undervalued. And for this, I calculate the margin of safety price. And if you're interested in learning more about how I research individual stocks and businesses before I invest in them, you can also watch my video down in the description below. I've put a link there. So firstly, I wanted to say thank you so much for making it this far into the video. If you did make it this far, you are a legend, and make sure you do give this video a like if you haven't already, and subscribe if you do want to see more. Now I'm going to go through some investing tips for beginner investors, which I honestly wish I knew earlier when it comes to investing. The first tip is to ease yourself into investing. Now that you've done all of your research, you have your online broker, you have your wish list of stocks, now is actually time to start investing. Personally, I don't like to invest all of my money straight away because there's the potential that the stock price could go down even lower. So what I usually do is I invest about 25% of my capital into that investment, and then I wait a couple of weeks and see if the price goes up or if it goes down. That way, if the price goes down, I still have a bit of cash on hand to invest at this new lower price. And if the price goes up, at least I still have some cash on hand to find another great opportunity to invest in. For example, back in the big stock crash in March, I did invest a little bit of money during that crash, knowing that the price could have dropped even further. But I'm glad that I didn't invest all of the money that I had to invest at that time, because honestly, it was just so uncertain at the time. So I'm glad I didn't take that extra risk by investing all of my available capital to invest at that time. Number 2, remember that there's a difference between investing and speculating. When I first started investing, at the same time I also started investing in cryptocurrency, and honestly I thought that I was a cryptocurrency genius. I was making these amazing returns, I was so happy with myself, and I thought that just because I was reading different articles online about cryptocurrency and the different altcoins that I knew what I was doing, but clearly I didn't, because I didn't get out at the right time. I lost a lot of money in the process, and it really made me realize that there is a difference between investing and speculating. So it is important that before you start investing in anything, that you do your proper due diligence and you really research what you're investing in and make sure that you actually really understand it. And this can help you prevent panic buying and selling at an undesirable time in the market and losing a lot of money in the process. Number 3, don't get too caught up in the highs and the lows of the market. When I made my first investment, it was in this robo-advisor called StockSpot, and honestly, I was so nervous about it. I was refreshing my computer constantly, seeing if the price had gone up or if it gone down, but I realized that that's no way to live your life. And I myself am a long-term investor, so of course I do check how my investments are going from time to time, but I don't get too caught up in it. I do like to make sure that my investments are moving in the right direction, but I'm not checking the price constantly and getting so caught up and emotional about whether I should sell shares if the price goes down a little bit. So that's another thing that I've learned. And the 4th thing is that you can get a 50% capital gains tax discount if you hold on to your shares for more than a year. So that's another reason why it's good to be a long-term investor. If you are a long-term investor, all of the capital gains that you make, or the profit that you make on your shares, gets a 50% discount if you hold them for over a year. So that's definitely something that you should keep in mind when you are trading in the stock market, to try and hold on to your shares for at least a year so you can take advantage of that discount. I also use this site called ShareSite, which allows me to connect to my brokerage site, CMC Markets. You can also connect multiple brokerage sites if you do have 2 or more sites that you're using, so you can easily track your portfolio in the one place. And it's especially good around tax time, because I can easily send reports to my clients of how my portfolio went over the past financial year. And he can easily see my capital gain. By the way, I've put a link down in the description below so that you can have a look at ShareSite yourself. It's free for up to 10 holdings, and if you do want more than 10 holdings, the link below will also give you 10% off. So check it out if this is something that you're interested in. Thank you so much for watching this video and watching all the way to the end of the video. I really appreciate it. And if you did enjoy this video, please give this video a like and let me know in the comments, what do you guys invest in and what brokerage sites do you guys use? I would love to know. And if you enjoyed this video, please consider subscribing. I produce 2 new videos every single week about making money, saving money, and also investing. I'll see you guys in the next one. Bye. And by the way, if you'd like to learn more about investing, I've put some links here to videos that you guys can check out. I highly recommend them, so make sure you click the links here. Do it. Click the links.